Hello students, in the current video I will explain the most important concepts of income tax, that is assessee and its types as per section 2 subsection 7 of the Income Tax Act, then assessment year section 2 subsection 9, and finally I will explain the concept of previous year section 2 subsection 34. These concepts are basic concepts which are very important for the students of BCom, MCom, CA, CS and CMS students and whoever learning income tax for their exams. Besides, I have already made two videos on basic concepts, especially the person video. Person is very important concept. I will share the link of those videos in the I button as well as in the description box. Please do watch those videos for better understanding side. So let's start this video. Assessee. This is the very important concept as per section 2 subsection 7 of the Income Tax Act 1961. What do you mean by assessee? Assessee means a person by whom any tax or any other sum of money payable under this act, and includes, in the sense, a person whom any tax has been levied or any tax is payable under this act is refers to as a person, and also includes every person in respect of whom any proceedings under this act has been taken for the assessment of his income, any other person in respect of which he is assessable or loss sustained by him or by such other person, or of the amount refund due to him or to such person. In the sense, what please precisely you bear in mind, the assessee here refers to any person on whom any tax proceeding has taken place, or any person who has incurred certain loss and submitted the income tax return and claiming the refund of income tax. All those people comes under the category. And the second is every person who is deemed to be an assessee. We will understand the types of assessee there. I will explain what do you mean by deemed to be assessee, right? Then finally, every person who is deemed to be assessee in default. Assessee in default also is very important concept, that also I will explain. Types of assessees, the next important concept. Ordinary assessee. Who is ordinary assessee? All those assessees comes under the category of definition of first, that is any tax proceeding, any what we call payment of tax or loss sustained or submitted the income tax return. All those comes under the category of ordinary assessee. The previous slide, whatever I have explained, those all comes under the ordinary assessee. Then representative or deemed assessee. This is very important. Deemed assessee here refers to, we will even call it as representative assessee, a guardian of minor, a lunatic, idiot or insane, and an agent of non-resident. In the sense, what? A lunatic, a minor, an insane person may have more properties and they might be earning rental income, but they are not assessable by income tax department because they don't hold the position of what we call as per the law. Therefore, what will happen? Those people are governed by their agents, their representatives, right? Suppose X is a minor, the father of X is Z, so X is earning huge income, might be a child actor earning huge income. Then what will happen? X has to pay tax. Then Y will be the assessee for income tax purpose, as X is the minor in this case, right? So that is called as a deemed assessee. In case of non-resident who is residing in USA, having in India certain properties, earning rental income, his agent will be paying the tax on behalf of the non-resident. That is called as deemed assessee. Then assessee in default. Any person who fails to fulfill his statutory obligation. Any person who fails to fulfill the statutory obligation is called as assessee in default. What do you mean by this statutory obligation? Here I have given an example. Suppose an employer duty is to deduct the TDS, tax deducted at source, from the employee's salary, or any interest payment if you are making, you must deduct the TDS. The TDS amount which you have deducted, that should be paid to the government income tax department or government treasury on behalf of the person from whom you have deducted the tax. Clear? So if you fail to deduct the tax or if you fail to deposit to the government, in both the cases you will be called as assessee in default. Right? I hope I made you understand this concept. Clear? So we will further proceed. Assessment year. What do you mean by this assessment year? Assessment year refers to the year in which the income of a person will be assessed. In the sense, assessment year means the period of 12 months commencing from first day of April to 31st March. See, years of two types. One is calendar year, another one is financial year. Calendar year starts from 1st April to 31st March, which will be considered for calculation of income taxable under the head Income Tax Act as per Indian law. Whereas what we call calendar year starts from 1st Jan and 31st December. So we don't follow that. We will follow the financial year 1st April to 31st March as per the income tax calculation. So the assessment year will be of 12 months. It is known as a financial year and income tax department has selected same for its assessment procedure. The same thing which I have explained just now. Assessment year refers to the year in which income of a person related to the relevant previous year is assessed to tax. In the sense what? The assessment year is the current year, presume that, in which you will calculate the tax liability of the previous year, that is last year. So in the current year we will be calculating the tax liability of the last year, that is called as previous year. The year in which we calculate the tax liability is called as assessment year. In the sense, we are assessing, we are calculating. It means any income earned in the previous year is taxed in the assessment year. Our current assessment year 1st April 2003 to 31st March 2024, 23 to 24. So current assessment year is 23 and 24. In the sense, whatever income we earn in the year 23 and 24 financial year will be taxable in the 24-25 year. I hope I made you understand the concept of assessment year. Next, previous year. So just now I have explained some basic information about the previous year. Previous year refers to the year preceding the assessment year. Year before the assessment year is called as previous year. In the sense, any year which is before the assessment year is called as previous year. Income earned in the relevant previous year is assessed to tax in the assessment year. So the income earned in the previous year will be taxed in the assessment year and measured or calculated, and tax will be levied in the assessment year. Current previous year is 1/4/2022 to 31st March 2023. So 22-23 is our current previous year. Current assessment year, just now I have explained, 23 and 24. So like this it will be their assessment year and previous year. So I wish you all the best. Thanks for watching the video. Do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative, informative videos. Thank you very much.